Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of longer-term technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be talking about, instead of Bitcoin continuing through 2019 on into an accumulation phase and starting a bull run in 2020, like we've talked about so much in this video, I want to talk about whether or not Bitcoin is about to start a bull market or potentially about to extend the bear market, because there's actually a very strong case for both of those situations. The idea that Bitcoin could start a bull market in the next couple of months, and also the idea that something very bearish could happen here in the next couple of weeks that could prolong the bear market 6 months to even a year. Either one of these can happen. I'm going to be laying out both of them in today's video and explaining which one I think is more likely as the video progresses. So if you guys enjoyed today's video, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell. Guys, I am currently out of town when you're watching this. This is being recorded on the 21st. That was Thursday. This video is actually being recorded a couple hours after that video, so I'm actually continuing on with what I talked about in that video. If you haven't already seen that video, I do highly recommend you go back and watch it. That video went up on Thursday, a couple days before you're seeing this. Anyway, without much further ado now, let's go ahead and get right into it. I'm not going to do any short-term technical analysis in this video because this video is being uploaded 2 days after it is being recorded, so we're doing purely long-term technical analysis because we can actually talk about things that are still relevant, and we can have some information here that isn't going to be out of date. So ignore the price action over here. The prices that you're seeing here on Bitcoin at the moment very well may be different from what they are in the future when you are actually watching this video. So let's go ahead and start with on the daily chart with the bullish scenario of Bitcoin breaking bullish. Now, at the time of recording this video, Bitcoin is not above this downtrend of resistance, and I obviously can't see into the future, so I don't know with 100% certainty whether or not Bitcoin does end up breaking this descending triangle pattern by the time you watch this video or sometime in the future after that. But what I do want to talk about is the bullish case scenario here. There's two different ways I'll break this down. One of them has to do with the idea of Bitcoin breaking bullish out immediately in the next couple of days, perhaps by the time you see this video, and then also the idea of Bitcoin falling back and then breaking out after. Either of these scenarios is very interesting because both of them see Bitcoin rallying to new highs up between $4,500 and $5,000. Those are the price targets for Bitcoin breaking bullish out of this descending triangle pattern. I'll go ahead and explain why some of those are like that. Let's go ahead and get Fibonacci retracement out here. And if we draw our Fibonacci retracement, we can see that, interestingly enough, there are levels on the Fibonacci sitting right around $4,450. You can round that up to $4,500 at the 38.2% Fibonacci level, and the 0.5% Fibonacci retracement level from $6,600 is very close to $5,000. Those are also somewhat big even numbers, so it wouldn't be surprising to see Bitcoin rally to those levels and start moving to the upside. And guys, I do think that there's a lot more bullishness in this market than there was at the same period in 2014. We're going to be doing a lot of comparison to 2014 and 2015's bear market in this video, and this is the first one. The market for 2018 and 19, the bear market here, has mirrored 2014 and 2015 almost exactly, almost point for point. I'm not going to get into that in today's video because I've talked about it so much in the past. Other YouTubers have covered it also, so I'm sure you understand all of the similarities between this market and the one that we currently find ourselves in. But I believe that we are in this period right here. This is the accumulation phase, I'm calling it. This was the start of the bull market, and this was the start of the accumulation phase and the end of the bear market for the 2014 bear market. I say that we're somewhere right around there. That seems to be right about where we are in our current market. And what you have to realize is that 2014 and 2015, while the market was very similar back then to the way the market looks now, both of these markets look very, very similar. While they are very similar, the fundamentals were different. And Bitcoin was far more bearish back in this scenario back over here when Bitcoin was down here below $300. It was far more bearish. The regulation was nowhere near as clear as it is now. The adoption was nowhere near as well. Bitcoin was nowhere near as well adopted as it was now. The space was not developed as much. As many people didn't know about Bitcoin. There wasn't as many bullish things on the horizon for Bitcoin back here. Overall, Bitcoin was more bearish in this case. And that's very interesting because back over here, Bitcoin still managed to stay in this accumulation phase for about 10 months and then start the bull market. And if you look at the time period, then we see that we're actually kind of doing what we did in 2014 and 15 on fast forward mode. This part of the market, the actual bear market, if you draw that out, and we grab our measuring device here, then we'll see that this only lasted about, as you can see, 330 bars. This is the daily chart, so 330 days. But the time period that it lasted over here was actually about 400 days. So we're kind of on fast forward here in the 2018 2018-19 market if we're comparing these two markets. And I think that the market and the fundamentals for Bitcoin are far more bullish here than they are over here. I think they were far more bearish back over here. We had things like the Mt. Gox hack happening a couple months before that, about 6 or 7 months before we were at the same period in the 2015 market that we are in now. Overall, the market was a lot more bearish, and overall, it seemed like the market was taking longer to ramp up and start a new bull market. So there's definitely a case to be made that if Bitcoin breaks bullish out here, Bitcoin might stay above this uptrend of support right here indefinitely and never go back below it. There's a very good case to be made that Bitcoin could break bullish out here, move towards $4,500, $5,000, and not stop moving. Perhaps it trades sideways for a little while like this and then starts moving up sometime late in 2020. I think there's a pretty good case to be made that Bitcoin could be trading above $6,000 by the end of 2019. Now, we're going to get into which of these scenarios I think is more likely at the end of the video. You have to realize I'm playing devil's advocate for the bullish scenario when I just said that. That's not exactly necessarily what I think, but that is the case that the bulls would make, that Bitcoin is going to continue moving to the upside. Now, let's go ahead and talk about, well, actually, one more thing on the bullish thing, and this will lead us into the bearish case. Bitcoin currently finds itself above the 200 weekly moving average. And that's why we're on the Brave New Coin Liquid Index for Bitcoin chart right now, because this chart is very, very old. It allows us to look very far back into the history of Bitcoin, all the way back to the Big Bang of January 3rd, 2009, when Bitcoin first came into existence. But interestingly enough, we find that Bitcoin right now is trading above this line right here. That would be the 200 weekly moving average, an extremely important moving average across all markets. As we look here on the S&P 500, one of the most important ETFs and index funds on the planet, we see that the S&P 500 recently bounced off of this moving average. I'm not going to get into all of the reasons why that's such an important moving average. Just go with me. It is a very important moving average. We've discussed it in previous videos. Interestingly enough, the 2015 accumulation phase down here saw Bitcoin stay above the 200 simple moving average on the weekly chart. If we manage to stay above that in this market, then we will be repeating history, and that would be very bullish for Bitcoin. But that 200 moving average is a double-edged sword, because this leads us into the bearish case. Let's go ahead and zoom in here to the short term, to the daily chart. We'll actually come back to one of our normal charts so that we can go into the 4-hourly. And I want to talk about something, and that is the idea of Bitcoin breaking bearish here in a way that very well may happen over the next couple of days before you see this video, and it might not. Either way, we're not really doing short-term technical analysis here. I'll account for both scenarios. But if Bitcoin, one, is to break bearish here and get resistance and start moving down, or, in fact, if Bitcoin breaks bullish and then eventually starts falling back down again and starts heading back down into this longer-term consolidation pattern that we see here, this one right here with the downtrend and the uptrend, if Bitcoin does that, that is going to be very, very bad. And I touched on this briefly in the video that I recorded just before this one that went up on Thursday for you guys. This consolidation pattern is dangerous. And the reason it's so dangerous is because Bitcoin's bouncing around in here. And if Bitcoin doesn't break out of this and get away from it and nullify this part of the accumulation phase, and Bitcoin does get back down in here and start bouncing around, that would be very bad for one reason and one reason mainly. This is a symmetrical triangle pattern. Symmetrical triangle patterns are consolidation patterns. Consolidation patterns tend to be not accumulation patterns, continuation patterns. This is a continuation pattern of a bearish rally, and that would be very bad. If Bitcoin breaks below this uptrend of support and starts moving to the downside, then guess what it's going to do? That is almost invariably going to result in a bearish break of the 200 weekly moving average. Look at this. The 200 weekly moving average just so happens to be lining up almost perfectly with this uptrend of support. And if Bitcoin breaks this uptrend of support, you can almost guarantee that it is also going to break that 200 weekly moving average. And if we look back in time into 2014 and 15, then what we're going to see is that it was absolutely vital that Bitcoin stay above that 200 weekly moving average so that market structure could be held and so that Bitcoin could go on a new bull run. And all of these comparisons for the last several months, for the last like 8 months that I've been making to this market, to the 2014-15 bear market that we have all been making and comparing to the 2018-19 bear market, all of those comparisons go completely out the window if Bitcoin breaks bearish below this consolidation pattern right here. If Bitcoin breaks bearish here, this would be extremely bad. This would be a break of market structure, and it would be much harder for us to do technical analysis on this because we don't have market structure to predict what will happen in the future to Bitcoin. If Bitcoin breaks bearish here, it will break the 200 weekly moving average, and it would likely break $3,000, which would be a break of another piece of market structure, that being the 85% retracement level. We pulled back 85% from all-time high in this bear market so far, and the exact same thing happened in 2014 and 15. We pulled back right around 85%, as you can see, 86% or so. That would be a break of a lot of different levels of market, a lot of different pieces of market structure, and when we start seeing market structure break, it's much easier for Bitcoin to stay bearish for longer. If Bitcoin breaks that 200 weekly moving average and $3,000, it's very, very likely that Bitcoin is going to start moving down towards $2,000, $1,500, $1,000, maybe even lower. Probably not, but maybe down towards around $1,000. It wouldn't be impossible. Now, it might not stay down there for long, but that would definitely extend the bear market, and I don't know about you guys, but I'm getting kind of tired of waiting. I've been waiting for the last 17 months for Bitcoin to go into the kind of bullishness that we all miss so much, and I'm sure you guys want the exact same thing for very good reason, of course. Anyway, guys, there is a lot of technical analysis I can do on short-term bullish case scenarios and extensions of the Bitcoin bear market. Tell me in the comment section down below. Now, I won't see those comments for a couple days, but tell me in the comment section down below what you think of today's video and these topics. I'm going to come back when I get back, and actually, I may read the comments while I'm on vacation. I probably will because I have the YouTube Studio app on my phone, so I do read comments on my phone, so I probably will see your comments. Definitely consider dropping a comment and telling me what you think about both of these scenarios. I'm interested to hear your opinions as always. I'm sorry the video is a little bit shorter today, but of course I'm recording this video the day before I leave, so I have to get a couple of videos out for you guys. I will be back and making topical daily videos on Monday. This video should be going up on Saturday or Sunday, probably on Saturday because that's the order I've recorded them in. But anyway, guys, that is basically going to do it for today's video. I do want to thank each and every single one of you for watching and supporting the channel as always, and I will see you guys in the next video. Peace.